morning, everybody. Morning, Saul.
Morning.
I think let's start with Google. Google released some results last night, and I want to bring them in first because we want to talk about big tech and the influence that big tech is having on regulators and also on smaller startups and scale-ups here in the UK. So let's start with Google. Some cracks finally showing in that company last night. Their revenue has slowed. What did you think of those results? Were you surprised by what you saw from Google last night?
I mean, I think on one level, when you're as large as Google or Amazon or Apple or Microsoft, you're not always going to please Wall Street every quarter.
Yeah.
I think, every single year, Jeff Bezos republishes his letter to shareholders from 1997 and basically says, to all intensive purposes, if you want to hold my stock, hold it for the long term.
Yeah.
If you don't want to hold my stock, sell it.
Yeah.
And I think most smart investors are still holding Google.
Yeah.
So, 1 quarter, 2 quarters, maybe their revenue is not going to grow quite as much. They have, I think, over 5 or more products that reach over 1 billion monthly active users.
Yeah,
I think
crazy.
most companies in the world would kill for that.
Yeah.
And, I think if they do have cracks that they're showing, it's the same crack that Facebook is showing, which is that they have a business model that is entirely built on advertising.
Yeah, absolutely.
And that has inherent challenges, I think, as we understand better how data is used by companies, not just tech companies, but by companies, to sort of make money from us as consumers.
Yeah, absolutely. Data being the big play there. So as you said with Google, I think the figure is 85% of their revenue still comes from advertising and that big search product that we see every day on our computer screens. Since we're talking about fintech today, in terms of looking at the big tech players, Google, Apple, Facebook, Amazon, Microsoft, which of those are doing the most interesting things, would you say, in financial tech?
I think all of them in different ways are doing interesting things, at least on the consumer side. Obviously, Apple with Apple Pay and Apple's card, which they've recently announced and launched in the US, are doing very interesting things. And obviously, they're going to come to market with over 800 million Apple IDs linked to credit cards, which is a pretty big opening statement.
Yeah, absolutely.
Amazon obviously have been, playing around the edges, I think, in financial services. They're actually surprisingly strong in B2B financial services, so supplier financing and sort of, financing merchants on their platform. And that, I think Alibaba have shown in China is, a massive business that's sort of kind of invisible inside Amazon at the moment, which is actually, something that they can and will make more of.
Yeah.
Google has had a number of sort of false starts, I think. Google Pay, has some traction now, but they've never really sort of pulled it together, I think, in the way that they can or they would want to. And I think Facebook is a sort of a TBD.
And they're looking at blockchain, right?
Well, I was
David
going to
Marcus
David Marcus. As I think you've kind of discussed in the past. David Marcus moving. Well, David Marcus was the head of PayPal. Yeah. Was recruited in to run Messenger. And now, having sort of built Messenger to 1 billion plus users, has moved to sort of run what was Skunkworks a year ago, but I hear now is a couple of hundred people working on blockchain.
At Facebook.
At Facebook.
Is that happening in Menlo Park, or where is that?
It's happening in Menlo Park. And, you know, I think it's not unimaginable that in the next 12 months, Facebook will tokenize Messenger and start to do peer-to-peer payments on Messenger. So, I mean, that's a very kind of different version of the future of finance, but, you know, I think all of these guys in different ways are actively and aggressively playing in financial services.
You talk about Apple hitting the market with 800 million users. If Facebook did that, that's 2.38 billion users that they immediately have access to.
Yeah, the big difference is Apple's got 800 million paying users.
Right.
Facebook has kind of almost zero paying users.
Right.
So, I mean, as large as the reach of Google and Facebook, you know, they don't have the transactional or the payment relationship that Amazon and Apple have. So I think, you know, Amazon and Apple are really the key kind of challenges here to traditional financial services when you look at big tech. You know, Facebook has a much more disruptive play potentially with decentralized payments. And Google, I think, is sort of, you know, hasn't found its groove, basically.
Yeah, so Google's a little bit lost in the forest there. Facebook has the scale. Apple perhaps is best positioned to roll out some kind of snazzy, amazing financial product that will disrupt big banks. What about for startups in the fintech industry? And we know that London is a fantastic ecosystem for any startup. And I'm sure there's a few in our audience, even whether founders or people who work at these companies. When those companies think about their future, you know, they scale up and then they get to a point where actually they hit a wall because Google or Apple or Facebook or Amazon or Microsoft have come up with something that's going to just blow them out of the water or just be bought out. What's your advice to startups in trying to forge a path that could maybe try to avoid big tech?
Well, I mean, I'd first say that, you know, the financial services industry, if you include insurance, and actually if you include property as an asset class, and, you know, that could be through mortgages or that could be through investments in real estate. If you look across all three of those areas, if you like classic fintech, prop tech, insurtech, you're talking about a global industry that is in the many, many trillions of dollars. So the first thing I would say is that, you know, there's room for everyone.
Okay.
There's room for the big tech companies because, you know, we know from the past that they will not flawlessly execute in every new market they go into. In fact, they rarely flawlessly execute into any new market they go into. So I'd say that about the big tech companies. I'd also say that a lot of the incumbents are a lot smarter than a lot of startups give them credit for.
When you say incumbents, who
I mean,
who are you referring
like
to?
big banks, big insurance companies.
Okay.
And, you know, I think there are different levels of progress, but if you look at, say, for example, BBVA, the Spanish bank, they've been a world leader in sort of transforming their business to be more tech first. In the US, they've acquired Simple. In the UK, I think they own about 40% of Atom. And so they've basically said in markets where we don't have branches, we're going to enter those markets digitally.
Wow.
And they've been fantastic.
Are there any British banks that you would say are
Well, the person who continued the charge there was the former chief product officer at Barclays, Derek White, who did an amazing job actually, I think, at Barclays, and Barclays have done a pretty good job in terms of, you know, some of their consumer products. The other people I would point to, and there are a number of incumbents who do a really good job, are Goldman's. So Goldman's now describe themselves as a tech company. They have a third of their staff in tech, about 15,000 developers, at least half of whom are actually managed out of and built out of London.
Wow.
And I think, you've seen Goldman's, who has sort of primarily been a bank focused on institutional clients historically, launch in the last 2 years Marcus, which is their first digital consumer product, a savings product, and that's gone incredibly well for them. So
plus, haven't they were behind the new card that Apple's bringing out, isn't that right?
Yep, they've been involved with that as well. So I think you can't underestimate how good and how strong many of the incumbents are, and you see that not just in sort of traditional financial services, but you see that in insurance as well.
Yeah.
But then just in terms of how big this opportunity is. When I was a partner at Index in 2008, after the financial crisis, it was pretty apparent to us that literally every single subsector of the financial services industry was up for grabs. Like FX, savings, asset management, I mean, you name it. Like the notion of financial supermarkets that Sandy Weil drove when Citigroup and Travelers merged in the late 90s, early 2000s, the unbundling of those financial supermarkets post 2008, when the banks were going to spend 5 to 10 years dealing with regulation and also just sort of focusing on their core products, allowed people like, for example, TransferWise to take a very, very narrow vertical, albeit a vertical worth $1 trillion plus, global FX, and just absolutely nail that.
So it made a whole bunch of niche markets. It doesn't look like that anymore. When you were at Index, you said it looked like there was a lot that was up for grabs. Would you say it's pretty saturated now?
No, I still think, I would have said even 3 years ago, the notion that neobanks would be, real material threats to incumbents seemed like fanciful.
Yeah.
And you look at a company like Monzo, and Monzo is fast approaching, the 5th or 6th largest bank in the UK. And to be the 5th or 6th largest bank in the UK is already very valuable. Yeah. And their infrastructure allows them to grow at a rate that no incumbent is capable of growing. Yeah. And their NPS, their level of customer satisfaction, is sort of at levels that a normal financial services company would find, extraordinary, to the point of, we didn't even know you could get an NPS over 5 or 10. Wow. Versus, Monzo and others in the 50s or 60s.
Yeah, and presumably you could say it's something that the incumbents took for granted.
Yeah.
The NPS score.
But again, I think it's not as if these incumbents are going to disappear. Yeah. But the markets are just so big. Savings, current accounts, FX, treasury, asset management, mortgages. I mean, the list goes on and on and on and on. And each one of these are, markets that can sustain multiple multi-billion-dollar companies.
Yeah, until at some point in a decade or 20 years, some bank like Monzo becomes huge and swallows up all those players that got those niche markets. See that happening?
Or decentralized finance, a la the David Marcus approach. Yeah. Or the approach being taken by, people who are still active in the blockchain and the crypto world, basically rewrites the rules again and says centralized banking, even centralized neo-banking, is not the right future model.
So society is going to be totally disrupted, people, by blockchain. Okay, it's a decentralized future. Is that what you, and governance, everything?
Well, I think the decentralized architecture that the internet ushered in 30 years ago has basically revolutionized all of the above.
Yeah.
However, we've sort of landed up 25, 30 years later with 10 companies that have centralized these decentralized networks.
Right.
So I think what we're going to see in the next 20, 30 years is effectively Groundhog Day. You know, we'll go back to where we started with the internet, which is genuine decentralization.
Yeah.
And instead of there being maybe 10 winners, as there are today, if you include Tencent and Baidu and Alibaba, you know, there will be 100 or 1,000 winners.
Yeah.
So I actually think, you know, blockchain or decentralization is just a reminder that actually the thing that got us to where we are today was a decentralized network.
Right.
What we got wrong was an architecture that didn't allow or didn't mitigate against centralization.
Yeah.
And the only way we can mitigate against centralization today is regulation.
Right.
So we do need a better architecture for this, and absolutely we are still long on blockchain being part of that solution, and I don't think we're alone in that. I think, you know, Andreessen Horowitz amongst the investor community is still very much in that headspace, as are Union Square Ventures, as are others.
Yeah, we're kind of at an interesting stage in that hype cycle, aren't we? We're kind of in the, maybe just going into the trough of disillusionment, would you say?
Deep
and then,
winter.
Yeah. We're in the
You
deep
know,
winter.
having been in high summer 2 years ago.
So I've been told that we can take questions. So if anyone has questions, you can put them in on the app, and I'll keep an eye out for them. But we've just got a couple minutes left. So Saul, I'll hit you up with a question about your shirt, which says immigrant on it. Living in a time of Brexit, where we kind of are in this age of uncertainty, but something is going to happen at some point that will involve borders being drawn and rethought. What are your thoughts on, you know, how this sector is just going to evolve post-Brexit? Big question, but what are your initial thoughts on that?
Well, I mean, firstly, the reason I'm wearing this T-shirt is because it was given to me by someone whose visa application I helped to support.
Nice.
She was applying for a US visa, which is one of the hardest entry visas to get.
Tell me about it.
So before we worry too much about people coming into the UK or Europe, let us not forget that the hardest place to get an entry visa in the world right now is, you know, the land of liberty.
Yeah, just to the left.
But you know, the other reason I'm wearing this T-shirt is because, you know, my parents emigrated to the UK in 1976 from South Africa, and you know, their parents emigrated in 1910, 1920 to South Africa from Russia or Poland or Lithuania. And I think, you know, when you walk around this country, but particularly this city, you know, we all have an immigrant story, or most of us have an immigrant story. I think, you know, when it comes to London, the mayor has been very, very clear that London is open. The mayor himself, you know, is part of an immigrant family. And I think, you know, it's just part of who we are today. You know, obviously Brexit encourages us to sort of think more deeply about what a British identity means at this stage. And I think that's not a discussion that Britain is having alone. But, you know, when it comes to tech, you know, what we have seen is that, you know, on June 24th, 2016, we decided 52% of us to leave the EU. The next year, the amount of venture capital invested in the UK doubled. The year after, it remained double. venture is an asset class that looks 10 to 12 years into the future.
Yeah.
So no one doubling their investments in the UK after June 24th hadn't heard of Brexit.
Right. Yeah.
And I don't think the Norwegian Sovereign Wealth Fund hadn't heard of Brexit. And I don't think Warren Buffett hadn't heard of Brexit. So, I mean, my view is we've been trading with Europe for 800 years at least.
Yeah.
So, you know, maybe some things are going to be harder, some things are going to be more difficult, but, you know, we'll get through it.
Yeah. Keep your eye on the long term. Okay, we are just out of time. Thank you so much, Saul. That was really interesting stuff. And thank you so much to our audience for listening. Have a great morning.